Stock of the day is Travelers Companies. Is Travelers stock at a good level to buy now? Let's take a look. Well, Travelers Companies is an insurance business that offers property, casualty and surety products across the US and in selected international markets with a $48 billion market cap. It's far from the biggest stock in the sector. However, it compares favourably enough with the likes of Allstate and AIG. Travelers has annual sales of around $41 billion and a net income of just shy of $3 billion. And the stock has an institutional ownership ratio of 81%. This is one metric where a higher number is a vote of confidence, in my opinion. Travelers is rated a hold by Wall Street analysts who have a consensus price of just under $213, which is a fraction above where it is now. And on that basis, it trades at an undemanding forward PE ratio of just 12 times, though that is a higher multiple than some notable peers. Given that Travelers has a mid-table 5-year earnings and revenue growth profile, it's not immediately clear why the shares trade on that premium rating, though it does have a solid-looking track record as far as dividends are concerned. In fact, according to Barchart, it's paid a dividend since at least 1987, and between dividends and sharebacks, Travelers returned nearly $2 billion to its shareholders in 2023. Now, the stock price has performed well recently, with the shares up just under 11% year to date, during which time it's printed 9 consecutive highs. That rally and perhaps the premium valuation can explain by the fact Travelers smashed through its EPS forecast when it reported Q4 earnings in mid-Jan. Analysts were looking for earnings of just over $5 per share, and Travelers delivered just above $7. The firm's CEO called the figures exceptional and attributed the beat to reduced catastrophic losses and robust underwriting gains, as net written premiums grew by 13% to just under $4 billion. The stock's all-time high is around about $215, and it was posted on the 22nd of January, the day after the stock gapped up by $12 on the earnings announcement. Travelers isn't going to set the world on fire, not least because there's no guarantee that the bumper Q4 earnings weren't a one-off. After all, catastrophes are unpredictable black swan events. That said, it posted a 13% growth in its personal insurance arm and a 16% growth in its business insurance division in 2023, added to which expenses at the firm continued to fall as both underwriting income and cash flow forecasts from operations improved. Book value per share at Travelers is growing at a compounded rate of 7.5% per year and now stands at just under $123 per share. That growth has been spurred on by rising investment asset values, which have grown by around $23 billion since 2016 and now stand at $92 billion. So is Travelers stock one to buy on a pullback or a breakout? Well, the S&P 500 financials sector, of which Travelers is part, has rallied by almost 22% in the last quarter and has only been outperformed by the poster boys of information technology and communication services. To my mind, that suggests that a pullback is more likely, but I guess it can't hurt to set an alert for $216 just in case. If you want to see our most recent ratings and analysis on Travelers, just come to Good Money Guide, search Travelers.